This week, right, in terms of topics, I don't have like one single company to talk about because there are so many companies just released their earnings, right? And I'm still in the midst of reading those earnings transcript. So I won't give a full detail into the earnings release. What I will do is just I'll flesh out the companies that I'm currently looking at, and then I will just give some high level commentary. And then of course we will go into the Q&A after the sharing session. So let's start from the general market first. There are a couple of slides here. I'm showing the stock market performance over the past 1 month because I feel that the stock market, right, is really kind of crazy at the moment. It's keep on rallying, right? So this is really out of my expectation also. I mean, always, right, as always, market goes up, I also surprised. Market comes down, I also a bit surprised. But actually, all these things is normal. So market up and down, this is definitely normal. But let's start from general market first. S&P 500 was up about 2% over the past 1 month. And if we look at QQQ, right, it's up about 4.3% over the past 1 month. So you see, usually, let's say we talk about market goes up by about 1% per month, right? Then you will get 12% per year already. And 12% is already quite a good returns. But when a single month, say for example, in the month of October, right, we are up 4%, right? That is a bit a lot. That's why we can kind of feel okay, market is all-time high. It's getting a bit frothy at the moment. That's why there are people having concern in terms of the market valuation and so on. This is my portfolio returns. So you can see, right, around April during tariff period, right, there was down 20%. So now it's already up 20%. And if you look at the past 1 month, right, you can see that it really up a lot, right? From let's call it between from 17% suddenly just straight up to 22%. So definitely portfolio is doing great at the moment. So that's why also I think it's time to be a bit more cautious. But if we look at all these individual companies' earnings numbers, right, I think the numbers all, on a high level, they all looks very good. Okay, let's go into some details. For Meta Platforms, actually, okay, if you look at their returns over the past 1 month, right, it dropped by about close to 10%. If you look at the earnings, I think earnings numbers was okay. It wasn't bad at all. So let's say revenue earnings numbers looks good. It's just that I think analysts or let's say investors, right, they are getting worried about how much Mark Zuckerberg is going to spend over the next 1 to 2 years. It seems that he's not trying to constrain himself when it comes to capex. So when it comes to all these data center building, numbers will be keep on going up. Even the latest quarters, right, they spend a lot on capex. So next 1 to 2 years also will be quite worrying in terms of the capex spend. So basically there are two things, right? One is how much they're going to spend. Secondly is how much ROI that they are going to get from all those spending. If let's say they spend too much and not getting a good ROI, right, then that's destroying value, right? The message came from Mark Zuckerberg is that they are seeing good ROI from all this spend. So don't worry too much about this. Let's say if they underspend and they lose out in terms of all this AI build up, right, then they are permanently behind, right? So this is definitely too risky for them. That's why they rather overspend instead of underspend. So that's why that's the only thing that people are worrying about. But I'm quite surprised that it dropped 10% for this. I think the last time when this happened, right, was during the metaverse spending, right? So that was also when their stock price dropped as they see more results in terms of all this spend translate to higher revenue, higher margin, right? Then the share price will come back, right? So this round, I don't know how much it will drop. So, but also depends on their executions over the next 2 years, right? And also the monetization, right? So there's a lot to watch. But I'm actually quite confident this round in terms of the directions, right? Which is on all this AI as compared to during metaverse period. Metaverse, I'm not that confident on that. That's why I saw off. But when I saw Meta, that was I think the share price was around just slightly above 200. So I really miss out all these gains. But surprisingly now, I'm getting a bit more bullish compared to those who are worrying about all this capex. So that's Meta Platforms. Tesla, I think there's no earnings wise, I haven't covered the earnings, but I think mostly in line with expectation, right? But I think the thing to look forward to for Tesla is that their board meetings and also the vote on Elon's compensation. So as a reminder, right, let's say if you are investor of Tesla, please reminded to vote. Because if you don't vote, right, actually I think quite a number of all those money that's managed by passive ETF, right, maybe they will vote in a way that is not in line with your expectations, right? So I think sometimes the good thing about invest actively, meaning that you own individual stocks, right, is that you can look into the details and then see whether you want to vote for or against on certain proposal, right? And in this case, we are talking about Elon compensation, right? I myself, I vote for the compensations because I still want Elon to lead the companies, right? So, but there's huge number of shares that is being managed passively or managed by active manager. They might vote differently, So let's say if you you are a Tesla investor, please vote accordingly. Just a reminder. This is 4 days from now, so soon we will have the result. That's the only thing on Tesla. Let's move on. On Microsoft, I think if we look at past 1 month, right? Okay, the stock price was flat, but I think after they released the earnings, it was kind of like good results, and then after that just cool off, right, during Friday. But in terms of the result, I would say that overall the result is good, because if you look at their revenue numbers, you look at their operating income numbers, they all went up by, just look at the high, all these numbers, right? 18%, 17%, 24%. All these are good numbers, and Azure, their cloud business, all those, they are gaining market share. So everything about Microsoft, I think, is good. And I think when talking about Microsoft, right, I always come back to the same thesis, right, which I think it all depends on their executions, because it is like how they monetize all this AI, right? Because right now, I think there are many companies that are using Microsoft Windows, using Microsoft Office, right? But I think there are still many companies that haven't really tapped into the capability of all this AI. So if you are using, let's say, like ChatGPT, or you're using Grok, you're using Gemini, right? You can see that there's so much capability that all this AI allows, right? For example, like help you with writing, help you with doing, like, let's say, generating image, all these things, right? But all these things is kind of like outside of the Microsoft Office suite, because they haven't really integrate all this into their products, right? So I think all this will take time as they continue to execute all these capabilities. Say, for example, as simple as taking meeting minutes. I mean, simple stuff, right? I know some companies already using that, but I think there's still many companies that are not using all this capability. And when all these capabilities start to roll out, right, all this will translate into revenues, right? Because I think for companies, they are perfectly happy to pay, let's say, like $50, $100 more per employee just to get all this capability to speed up the productivity, right? So I think these things, right, they will play out over the next 2 years, 3 years, 5 years. So I think that one is definitely something that can generate a lot of revenue from Microsoft. It's just that for now, I'm still thinking that, okay, it's still a bit slow in terms of the execution, because I myself, using my company's, let's say, like corporate account, right? When I use, let's say, like all this Microsoft Office, right? I still don't see a lot of all this AI being integrated. So there's still huge potential there. So that's like whether we are talking about recent earnings, or we are talking about the future 3 to 5 years trajectory, right, or outlook, right? I think I'm still very bullish on these companies. So on Apple, if you look at their numbers, I think if for Q3 it is still okay, because just look at their net sales, right? Let's say like 94 billions up to 102 billions. This is, to me, not like super good. But I think the expectations is also kind of quite low, because I think if you look at their revenue numbers, it was kind of like flat over the past few years, right? So people buying iPhones is more towards like just a replacement, right? Instead of like the size of the market getting a lot bigger, it's not that case, right? But if you look at their numbers, services, right, up from 25 billions to 29 billions, right? This is definitely a huge increase, right? And all these services is tied to their Apple's iPhone sales as well. So more people buying iPhones, more people are using their services, and all these services, right, their margin is quite high. So this is definitely a plus point. And also, please bear in mind that this is cut off as of September 27, right? So for iPhone, I think they just launched in about 3rd week of September, right? So that's 1 week of sales, right, that are recorded here. But if you are paying attention to, let's say, like the lead time, right? For example, let's say if you want to order iPhone today, how long you are going to wait to get your iPhones, right? So that is quite long, So from that sense, we can tell that actually the iPhone sales is a lot better as compared to last year. And also, I think there are more people buying Pro phones, because the iPhone, the non-Pro one, they don't have the big size iPhone, right? I think that one definitely also will help in terms of pushing more mix, like higher mix into the Pro phones, right? Which has a higher margin. So I think all this, right, is really good for their financials. So that's for the short term now. So let's wait for next quarter to see. I think their numbers will be a lot better next quarter. So I think all in all, I think it's good. And then FYI, I bought iPhone Pro Max. So this is not for myself, for my wife. So happy wife, happy life, right? So definitely I'm doing my part to contribute to Q4 numbers for Apple. So I think I'm just looking at my own decisions making, right? Because my wife said that she needs like a larger screen, right? And then if you go for the Air got some problem. Okay, the battery is like so small, right? So I don't have to risk it. Then if you want to buy the non-Pro versions, you don't have the large screen size, right? So for those who need the large screen size, right, they will definitely go to Pro Max, right? So, from that, they just get more money from me. So, and I'm not the only one having these decisions making, right? So I believe their numbers will be a lot better for next quarter. Okay, that's just short term. Long term wise, I think Apple is kind of like mature companies. And in terms of AI, they also didn't spend a lot on AI stuff, right? So that's why long term wise, if you think that Apple is going to have high growth, I don't think so. So it's more like a mature companies. They generate a lot of all these sales incomes, right? They will use it to do share buyback, right? So in terms of the company size, I think they will kind of like stagnant instead of like keep going up now. But from earning per share perspective or from return perspective, it may not be that bad, because as the shares outstanding shrink, right, the EPS will go up. As the EPS go up, right, your share price, just assuming a constant multiple, right, share price also go up, right? So you will still get a good returns while the market cap stay relatively like growing at a low growth. So I think all in all, I'm still above on Apple. So I'll keep on holding my shares. Next one, Nvidia. Nvidia didn't release earnings, but they have GTC. So I think this is the slide that is most applicable to investor, because as you see here, right, 2025, the CSP capex spend, right? So CSP here, they are referring to Amazon, all the three hyperscalers plus CoreWeave plus Oracle plus Meta, right? So you look at 2025 numbers, 443 billion of capex, and then it's projected to go up to 549 next year, and then further up to 632 billions. So people talking about all this AI overbuild, or whether this one will go down. So I mean, as of now, right, you can still see that 2026 they're still growing. So I think that's most important, right? So I think this one is already like even since last year, people are skeptical in terms of all this capex spend, right? But 2026 is another year of like higher spending. So for Nvidia, revenues, no problem. And then if you look at their roadmap, right, so the roadmap still very promising. I think their competitors, right, will still find a hard time to just catch up to Nvidia. So no problem, at least until 2026 and 2027. All these things, if you want to project like 5 years, 10 years ahead, it's very difficult, right? But at least we look like 1 or 2 years ahead, right? Nvidia is still leading. You just look at the product that they are going to roll out, right? They are not talking about chip anymore. They're talking about data center. They're talking about not just the rack, right? Now for the Kyber rack, right? They're talking about the entire data center architecture, right? So they are definitely operating at a different level as compared to their competitors. So that's why still very promising for Nvidia. That's why I keep holding on. Then Amazon actually up by about 11% over last 1 month. So of course their earnings positive surprise, right? Because I think I mentioned in the group also, their number will bottom around last quarter, and then over this just released quarters, right? And the next quarter, right, I think their numbers will look good, right? All these things is not a secret for those who follow Amazon in detail. Say for example, this one I think mainly came from the Trainium chips, right? They just roll out, right? So they have all these racks, and all these racks will support, let's say, companies like Anthropic, right? So if you look at their AWS segment, right, this is the one, because I think last quarter when the net sales, right, the growth just slowed down to 17%, people are getting worried. Now you see it kind of like bottom already, then the growth now re-accelerate again, right, to 20%. And if you look at the operating margin, it's also from 33% now up to 34.6% already. So growth accelerate, margin increase. So AWS numbers is looking great from here, right? So I believe this one is kind of like, okay, next quarter will be continue be another good quarters. So I think AWS is the segment that people are worried about last quarter. That's why the share price dip, right? Now suddenly all these problems become not a problem anymore. So I mean, sometimes you see let's say like 1 quarter of like slower growth, right? Just don't be panic. Just keep on holding on as long as you believe that this company, they are still doing the right thing overall, right? So I think they're fine, right? In terms of the market share, I think they are still able to maintain. And in terms of market share, they are still the largest, right? If you want to have, let's say, like you want to enjoy this growth in terms of the cloud computing, right? And cloud computing, sometimes we are talking about the legacy, the older CPU cloud, or you're talking about the new GPU cloud, right? All these things, right? I think AWS, they are still inside, like new, old, they're still quite a big player there. So 20% growth. So all the skeptics getting burned. Let's move on. For Google, I think Google result is the best, right, among all these companies. Over the past 1 month, share price went up by almost 15%. So people joke, right, say that you see Sundar Pichai, just look at his name, Pichai. So he has AI in his name. Still, you are skeptical about him. You shouldn't be skeptics, right? So numbers wise, definitely looks good. $102 billion in just single quarter. So that's their revenue numbers. And in terms of operating income, that's 31 billion. Overall, the results looks good. So in terms of their TPU, all these are also like, they have some moat there, because I think, let's say for other companies that they still need to buy from Nvidia, right? So definitely Nvidia, their chip is good, but you have to rely on Nvidia, right? So you are paying a lot of monies to Nvidia, right? But for Google or Alphabet, right, of course they still buy from Nvidia, because especially their cloud services, their customer demanded that, right? So they have to serve. But in terms of their internal workflows, right, they still rely a lot on their own TPU. And I think from cost perspective, it's definitely good, because they're relying on themselves, right? But a bit of like partnerships with Broadcom also on that. So I think this one definitely, overall picture is good. But I haven't read the transcript in detail, so not much comment on that. But just to give a sense of this, all this revenue, all this operating income number, right? So if you look at US companies, right, in terms of the earnings, Google now is number one already, 140 billions of earnings over the past 12 months. So that is that huge number, right? So 1 year of earnings, right, 140 billions, they can buy, like, there are many companies, the market cap is below 140 billion, So Google's number one in terms of earnings within US companies. And overall, if you look at all these lists, right, just talk about Magnificent Seven, right? How many of these are Magnificent Seven? You see, Google is here, Apple is here, Microsoft is here, Nvidia is here, Amazon is here, Meta is here. Only Tesla still like not ranked like top 10 or top 20 in terms of the earnings, because I think their earnings still quite low at the moment. So it's all about the potential earnings, right? Not talking about the recent current earnings. So Tesla is a bit like outlier in that sense. But if you look at all this, right, and then just look at this chart, right, in terms of the forward earnings, all this Magnificent share of S&P 500, right, it's already about 23%, right? So when their earnings, it constitute about 23% of S&P 500, and in terms of market cap is about 31%, right? I think all this makes sense, right? Because we know that share price is a function of, is a multiple of the earnings, right? And if you look at this 23%, you're asking like, why market cap is not 23%? Why it is higher at 31%? That's because all these Magnificent Seven, their growth rate is higher, their margin is also higher. Of course, their multiple is higher, right? That's why they are like, in terms of the percentage of market cap is 31%. And if you look at their revenue or their earnings, it's going a lot higher, faster as compared to the rest, right? So that's why I would say that, some people, they comment that, all this, the entire S&P 500 went up mostly because of 7 companies. The other 493 companies, they are not going up a lot. They are kind of flat. To me, this, if you invest in index or invest in S&P 500, you should know that the percentage of money that goes into all these Magnificent Seven, right, is like 31.6%. You should be okay with that. And I would say you should be okay, because you want your money to flows to companies that, like, more money flows to companies that earn more monies, right? So I think all this is like perfectly fine and perfectly okay. Just don't be confused by some article that say that, actually the market isn't as it's not a true bull market because only 7 companies benefit. But these 7 companies is big companies, and they are not US companies. They operate globally, right? So that's why I feel that some people, they tend to look at the negative things and just say that, you should be concerned because of this and that. Sometimes I feel that no need to be too concerned on this. Sometimes, let's say if you look at price multiple getting a bit higher, I think those are all normal, because market valuations is not a constant flat run, right? Sometimes it's up, sometimes it's down. This is just perfectly normal. What we are doing here is that we invest in all these companies, big or small, right? Especially when the company is generating good numbers, you just want to hold on to it and just invest for the long term, right? Don't just keep on focusing on the companies that didn't work out or not generating good numbers. So I think the key message is this, right? I do all this, sharing. So sometimes it's not to tell people that, all this company is good, all this company is bad, because I'm not giving like individual stocks recommendation here, right? I'm just sharing with you what I'm paying attention to, how I invest, so that at least you can learn something about like how I think and how I invest, right? Because to me, right, if you want to have a portfolio that is sizable enough, right, like big numbers, right, and even if I look at my portfolio, I don't think it is so big, right? It is still like, I'm still in the midst of this journey of building a sizable portfolio, right? To me, the most important thing is to identify good investment, right, or good companies, right? So this one to me is like, okay, if you want to talk about individual stocks, sometimes it's a bit difficult. Not many people know how to analyze stocks, but at least if you invest in, let's say, S&P 500, right, and you know that 30% of all this money flow into the largest companies, which is doing well currently, right, you just need to stay invested, right? Because I know that right now, if you look at stock market, right, I think many companies hitting all-time high, and hitting all-time high, naturally speaking, right, like just emotionally and psychology, right, I know that many of you, right, looking at market all-time high, right, you are thinking that market is all-time high, it will drop. Market is overvalued, it will drop later. Then naturally you feel that, why not I sell 20% or I sell 30% of my stock portfolio and then wait for the market dip. This is 100% perfectly normal emotionally. But if you want your portfolio to do well over time, right, you shouldn't follow all this emotion, because all this emotion, right, it tends to like destroy value. It tends to make your financial worse instead of adding value. Because if you are normal people, right, you will see that, market all-time high, then you sell already, then you don't know what to do when market continue to go up another 5%. You are asking like, should I buy back? So I mean, that kind of thinking, right, is like typical normal people, like they think like that. But if you want to do well, like just build your net worth using stock portfolio, right, you need to do the things that like normal people don't do, right? Meaning that you look at market going all-time high, right, just do nothing. This do nothing, right, sounds easy, but actually not easy to do. One, many people they will look at, wow, market all-time high, they wanted to sell, psychologically they wanted to sell. So but I'm telling you, you need to be okay with that, knowing that market definitely one day it will dip one. So but that dip, right, to me is like okay, first thing you need to tell yourself, it is expected, it will dip, you just don't know when. But we just ride with these things, right, ride with the market. You see, just scroll through my past like YouTubes, right, I've been creating videos for a number of years already. I think I started 2020 until now, right. 2022 was the year when market just have a drawdown of, I don't know, maybe 20%, right. So but market drawdown, we don't panic sell, right. Market create all-time high, we also don't sell, we keep on building our portfolio. That is especially true for those who are in your 20s, in your 30s, even in your 40s, right. As long as you are still working, generate income, whether you have your business or you are drawing a salary, right, you still have your saving, right. Your saving needs to be deployed in some sort of assets, right. And to me, stock market is a good place to build your wealth. And what you need to do is just continue to deploy your money. And then of course we wanted to deploy when the valuations is more attractive, right. But let's say even valuations getting too overvalued and too like a bit frothy, and like you feel that market might dip, right, at least to me, right, you should just hold on to your positions and just ride with it. Especially now, all these companies, their revenue numbers, or operating incomes number, all these numbers is doing well, right. Just ride, right. So as you can see here, every month, sometimes I know you guys might have noticed I don't share a lot in terms of my trades, right. So I think there are two reasons, right. One reason is because I don't want to be seen as someone who give like like recommendations. So let's say I buy these companies, then you thought that, this is a like a buy call, right, or buy recommendations. I don't want to fall into that category. I think that's the first reason, right. Second reason is because I actually don't trade a lot. Sometimes my trade, right, is like one buy after 2 or 3 months, right. But when I bought, let's say like the most recent one, right, I just bought the ETF, right, just like 10k bought into it, right. So to me, 10k is like quite a sizable transaction. So I just bought, and then I might do nothing for a couple of months, right. So that's why that is the part that is like there's actions, right. I bought something, people look at, you bought something, what are you buying, right. So people are attracted to this kind of like actions, right. But I think the one that is like adding value to my portfolio over the long term, right, is not the purchases, right. It was the purchases that I made a few years ago, and I just keep on holding to it. But sometimes it's hard for me to tell people that just hold, because the hold is like do nothing, right. The hold nothing is sometimes very difficult for some people. They wanted to rebalance, they wanted to sell this, buy that, they wanted that actions, right. But I will tell you, for those who focus on like invest for the long term, right, like long term investing, right, you will notice that most money was made by just holding on, especially hold on to your best performing stocks, right. Just do nothing and do that, and just be disciplined, just continue to deploy, continue to just build a portfolio. You look at your portfolio, any number that you're looking at portfolio, right, could be like, let's say 500,000, could be 1 million. I'm sure that this number is going to double, it's going to triple over the next decade, or if not next 10 years, it's next 15 years, right. So your portfolio will be getting a lot larger, but you need to learn to do nothing. So I think the key message is this, right. Sometimes I show up during market panic to tell people, don't worry, don't panic. Now market all-time high, I also here to tell you, don't panic sell. Market all-time, don't panic sell. Okay, that's it. See you in the next one.